All right. Should be up and running here. We have just about 3 minutes left until the close. Be going over the market and today's plays, talk about what to expect going into tomorrow. All right, let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for April 27th, 2021. SPY is going to close relatively flat there, and Q's just down a little bit, 0.37 there. Came into today overall bullish on the Q's and SPY, but not really expecting too much because we have been in a relatively low volatility environment, overall bullish. And are just focused on the gaps that we're getting. Now, tonight we do have, and tomorrow morning, some big names, Microsoft, Google, reporting. So we could see increased volatility and perhaps a gap in the morning, one way or the other. So that could shake things up, and that's perhaps why the last couple days a little bit more muted, a little bit more narrow in the range as more big companies report. I believe we saw also FOMC soon. So that's what I'll be expecting tomorrow is to look for kind of those names kind of lead the market, and then individual gaps, whether they reported or whatever the news is, to kind of guide the individual plays. Okay. So overall, bullish going into tomorrow. Focus, though, will be really on the big names reporting. Okay, let's go ahead and get into today's plays. First play mentioned out of the gate here, the CDNS. Okay, CDNS. CDNS was just a breakdown in the morning here. This is a lot like the ACI from yesterday. All right, so here was the CDNS in the morning, right here, basing at the bottom here on a pro gap down on the CDNS. Okay, and here was the ACI yesterday. So also a pro gap down and playing it at the open as a base breakdown. Okay, so CDNS was the first play there. I think it was a kind of a big stop, about $1.50. But it did move over $3 from the entry, so that was good. Nice follow through. And interestingly enough, the way that it bottomed was also similar to ACI, and doing so in kind of a breakdown failure fashion. And also on this one, kind of runner kind of gave back a good amount, but the first couple targets were good, so not too bad on the CDNS. Now, something that kind of you'll notice in yesterday and today, increased aggressiveness on these plays. Some of these have support not too far below. That was the case on the CDNS. That was the case on the ACI. But I'm looking for more follow through on these. I know that a lot of attention is being paid due to the earnings, due to the gap itself. So, I'm really seeing how much this will give me. And so far, yeah, follow through has been pretty good. Now, one that I did miss, okay, and you can see the support in the way there. 200 was in the way before. Also gave really nice follow through on the CNC. So I'm pretty comfortable with increasing the aggressiveness. Some of these plays, like yesterday, the NYCB and the GLW, which we'll look at in a second, do have some flaws there, and they're not quite as good, but I'm really looking for momentum on these gaps to follow through. It's earnings season. It's time for them. They're getting the attention. So I'm a little bit more willing to let some issues and things be problems with the play, but still take them. Okay. So, so far, from what I've seen, the follow through is there. Now, the gaps, I think, aren't really that much better than what we were getting a week or two ago, but the follow through is a lot better. So you can see, rather than getting held up here at minor support, it's actually getting all the way to major support. Okay, same with the FSM yesterday, right? So yesterday, even though it's still yesterday's gap inside of kind of this sloppy congestion, gets really close to getting all the way to major support, and today actually followed through even more, okay, on the FSM. So willing to be a little bit more aggressive, looking for bigger targets, bigger moves, even if, you know, the daily is going to have to get through some support or resistance, okay, depending on the play. All right, let's get to the GLW. The GLW, this triggered at lunch here. I was playing this base right here. Now, I was pointing out to the room, would have been better if we based more towards the top here. Instead, it had already come in a bit, and then kind of honestly halfway to the low of the day already, at least from here, even maybe a little bit more than halfway. So we did trigger in here. We were in it for the new lows, and then kind of shook us out right there. So I did lower the stop because we were in it for the new lows, hourly bar right there. So that topping tail did get us out, and then kind of went a few cents up after that. It was okay to look to replay. If you did a replay, it would be, here's the bar that got us out, and then you just get back in, and then you would be able to get some out here at low of the day, I think. That's not bad as far as reward to risk there on the retest. But it didn't end up falling through much more than that. So it's fine. I didn't end up replaying it, so kind of just let that shakeout happen. I was looking at it, maybe if we get another base like this, I could play if it broke underneath the lows and the 15-minute caught up. But you can see it resolved higher, or well, I guess it just stayed in the base anyway. Okay, so this play, even though we lost on this, I don't really have a problem with this play. It actually looks a lot like the FSM from yesterday. So here was the initial retracement, does the sell setup. Now, like I said, I would prefer if the base had happened closer to the top. That would give us a chance to actually get targets when it came back to the lows or broke the lows. But so here was the GLW, and then here was the FSM yesterday. So it's the same play. They're both pro gaps. Here's the FSM. What's nice about the FSM, because we played it early in the morning, we're still using the 2-minute. The 20 MA is right caught up to it. Okay, so I don't have a problem with the GLW. I know it didn't work as much as we needed it to in order to get to a target, but that was the play. And this, again, on the daily, into some support here. You can see the 20 MA still pointing up. You know, we have this grind higher, this uptrend that's going to be working against, but I was really looking for more follow through here. It's something that we could carry over into tomorrow as well to watch, to see if we get some follow through. If you guys remember the Oracle from last week, you know, once it was pretty extended up there on the daily, got some follow through, and then got some more follow through the next day as well. This was something we were watching short here. So GLW, not a bad one to revisit tomorrow as well, but we'll have so many gaps tomorrow that would probably be low priority. Okay, unless, you know, all the gaps are really tough and not that interesting, or they don't end up gapping that much to change the daily chart too much. You know, I don't think I'll be looking at the carryover list, but it's not a bad idea. So if you have the time, you know, GLW is not a bad one to revisit for tomorrow. Okay. So, like I said, market overall bullish, but I'm not really expecting too much from the market. I think it's all going to come from what do the big names do if they, you know, gap down big or gap up big. And then, so the focus will be on them, not so much the market. And then, yeah, as you can see from some of these plays, it's a little bit different than a couple weeks ago. I was saying quality first, as close to perfect as you can do right now. A little bit more willing to take more plays because I'm seeing a little bit better follow through. Okay, so you know, a couple problems here and there, spread or support resistance just immediately in the way, a little bit more excusable. Okay, and that's going to be the approach moving forward unless I start to see things not follow through as well. Okay, so that's the plan for tomorrow. Hope you did well today. We still got plenty of the week left, plenty of earnings season left. All right. We'll be back at it tomorrow. Talk to you then.